Now that we know long-term investing is important, one of the things that I get asked the most frequently is, where do I start? Do you go to your bank that you currently have your savings account with? Do you go to a competitor bank? Do you go to a mortgage broker or perhaps another lender? And all of this can be really confusing and overwhelming for a first-time home buyer, whether it's for your first home or an investment property, or maybe you're lucky enough to be buying a beach house that you're going to retire in. Whatever the case may be, there are some really important tips you need to know and differences between a bank and a mortgage broker.
So the main difference, that's quite easy to talk about is going into your bank versus talking to a mortgage broker. So, you're going to walk in and I'm assured that you're going to speak to someone who's professional and passionate about what they do and make the absolute best recommendation that they can based on the suite of products that that bank has. Mm-hmm. Now, and there's the key, because they can only recommend their own suite of products. They're not going to tell you if you actually could get something that fitted your situation better at another lender. A mortgage broker, on the other hand, our role is to take all your information, so not just your income and what you want to buy and what you want to do with the property, but look at your longer term goals as well. Mortgages go for 30 years on average, but most Australians, you might want to know refinance every 4 to 5. So what's going to happen even in that 4 to 5 period that we can see, because we can't bank on everything, that we should include when we're looking at what you want to do with your next purchase. A mortgage broker has access to a much wider panel of lenders. So we're making recommendations based on a whole huge suite of products. And as we've seen last year with the regulation changes, the cheapest product might not fit you. In fact, your lender might not even have an appetite for what you need to do, regardless of how many years you've banked with them or whether you've had an account with them since you're at school. So a broker has that policy knowledge that undermines, just a headline rate where you might just be attracted to in the media or online. We're also licensed, so we're either a licence holder or a representative of a licence holder. And we're licensed to provide credit advice. So that could be that your best advice is to actually do nothing. And it's in our best interest to make sure that that advice is particular to you and your situation and what you're doing. Because remember, ask yourself, how many people in your life know how much you actually owe and your exact income? A mortgage broker is going to know that. And you can develop that relationship with them. Whereas you don't know who your bank manager is going to be next week. So it allows you to get that good personal relationship with the same person. We're small business owners in most cases, so you can build that trust and rapport over a long period.
Your client and your customer is your primary focus when you're looking at their situation.
Completely.
It's not the product.
No, we're giving credit advice and then using the lender's product to fulfil the strategy. It's not the primary.
Exactly.
It certainly comes into play, and price comes into play, of course, but it's not the first priority.